What is founder stock? Well, founder stock is very similar to common stock. Oftentimes, it is simply common stock that is awarded to founders of a company early on in the process at the time that the company is founded. Now, the issue here is that it's not always that simple. Oftentimes, founder stock, or this term, is used with regard to startup ventures, and these ventures seek outside funding from equity investors who receive a preferred type of ownership interest. Now, in doing so, these preferred interest is compared against common stock, but to bring the preferred shares into existence, the articles of incorporation that created the corporation, if the corporation was not previously in existence, say perhaps it was an LLC or some other business entity type, and you're forming this new corporation for the first time as part of the funding process, which is quite common, you'll authorize common shares and preferred shares, but you oftentimes call those common shares founder stock. Or if you're have an existing corporation, then you go through a funding round and you restate the articles and you create a preferred class of shares. Again, you'll call the common shares founder stock because the only individuals receiving these common shares are the founders, the individuals who are already there at the company. The new investors are receiving a preferred share. Now, one interesting thing about founder stock and why you start using a different name, founder stock, rather than common shares, is that the common shares are made subject to various restrictions pursuant to this type of transaction. Basically, the shares are issued again at their par value. So whatever the par value is set for the stock at the time, if this is a new business entity, then the par value is generally extremely low, less than 1 penny. If it's an established entity and you're simply restating the articles of incorporation, then the par value is going to be the valuation of the company at the time. So with that being said, also the stock that's being awarded to the founders is subject to vesting, meaning that it doesn't transfer immediate ownership to those founders. The founders receive a grant of the stock, but that grant is subject to vesting over a period of time, and the founder only becomes an owner after that period of time has passed. Generally, it's somewhere between 1 and 3 years, and sometimes it'll even include milestones for accomplishments that the founder must accomplish during that period of time in order to vest in ownership in that stock. And the objective is to keep the owners motivated and driven in the company. And they'll oftentimes put other restrictions in there, like restrictions on the right to sell or transfer the stock. There will oftentimes be redemption rights for the company or registration rights granted to the founders. There'll be oftentimes co-sale and piggybacking, what we call piggybacking rights, where the holder of the stock can jump on board with the transaction if any other holders of stock seek to sell their interest at any point in time. And there are various other types of interests that you'll see included there that limit or establish obligations or rights in the holder of the founder stock. So to summarize, founder stock is simply stock issued to early founders of a company. They call it something different than common stock simply because it's subject to some unique provisions that generally common stock is not subject to. So that's how the term founder stock is used and what it is.